How's everybody doing today? Great, great. To get started, how do we all stand up? We've been sitting here for about an hour and change. Let's all stand up, do a little stretch.
I'm carried away now.
And then to start off, I'd like everybody here, so from this side down, if you're on the house left or stage left, I'd like you to repeat after me. When I point to you, I'm going to need you to say skill. A little louder, more energy, please.
Skill.
Great. Will. Great. We'll come back to that. Please sit. Great. So, oh yeah, I'm done. See you later. Now, so the purpose of this talk, as we talked about a little bit, is it really Mandarin's machine? Are we out here trying to kill each other in a Terminator scenario? In certain instances, in certain circumstances, in certain perspectives, the answer is yes. In others, the answer is no, and let's dive a little bit deeper to get a better understanding of that. And as I come through here, what I wanted to just ask for everybody, here's my email address, m.beal at Data Capital Management. My colleague is Honor at Data Capital Management. What I have to ask you, though, is to not take pictures during the presentation. Okay? One thing I guess I'm starting to get a little bit of a reputation for is we tend to talk a little bit more than others do. And I'll give you most of the slides. There's a couple of ones I don't want to share publicly. But I need to understand who has the skill and the desire to actually pursue these types of things, who has the will to do it. You reach out to me, I'm happy to help you with there. You're just taking pictures to put on Instagram or LinkedIn. You know, it's not helpful. Okay, so now we went through this a little bit, but we didn't talk too much, but I will speak at a very high level. So Data Capital Management, what are we? We are a machine learning hedge fund. We have a tremendous focus on alternative data, and our goal is really the things that Matthew and others were talking about here. There is a huge bifurcation between quantitative investing and fundamental investing. It's no longer appropriate in the new data economy that we're moving into, and that's really what Data Capital Management was entirely set up to be. To have a contextual understanding of what is driving the movements in any given security, and to really be able to take a more automated approach to fundamental investing. When you step back and look at kind of the backgrounds of our co-founders, hi, I'm Michael, I'm a fundamental investor, I'm a Harvard undergraduate, Harvard Business School, TPG Capital, and other public investing. But the rest of my co-founders are all PhDs, ranging in computer science to credit, derivatives, to everything else in electrical information theory, and are purely quants. And we had to spend really now 2 years coming together, just building out an architecture that would enable us to express both the way that they think about investing, but augmenting it with the way that I think about it, and then also taking a much more systematic and robust approach to the way that I think about investing, because I fully agree, I have trouble with kind of the way that investing relies on the senior most person's intuition, which has some kind of confirmation bias, because they wouldn't be there if they had been wrong in the past. So, when you look through it, what is it and how do we go about doing this? All right, so combining that fundamental, that quantitative, and then as we mentioned, a real focus on alternative data sources and the work that's required. So machine learning, statistical tool sets, and then it's all about the cloud. Now, when you look through this, obviously machine learning is very exciting and it's critical for the things that we're doing, but I'm going to kind of move past this. Yes, we use all the different types of approaches. There's a lot more that are coming. You apply that over to the alternative data sources, both in terms of trying to figure out the structure of the data, but then also the investment theses. But this is really the core of that, right? So in order for us to get excited, which is where we started off with this idea of machine learning and application, we really had to spend 2 years building out an entirely new approach to architectures, right? And the integration and the real-time actions and everything else that goes around that. And so I guess the question that we have is, why is it that we had to spend so much time around this? And one of the things that I'd like to do before I dive into how exciting it is, and I thought that they did a great job of laying out the possibilities, let's talk a little bit more about some of the realities and why we had to spend so much time and fill out on some of the conversations that we started on the previous panel. So we talked about this in this context of data acquisition. That was actually really hard when we first started. How do you go about finding the type of information? How do you think about storing it and the likes? The core about data capital management and what I think is required for successful investing in the data economy is that we have a tremendous focus on what's going on in the West Coast, and it's our job to bring it over to the capital markets problems to be solved. You'll see me here wearing a suit, but in the office, I mean, I'm not as kind of stylish as the CEO of Numerai was. But that's more what we look like, right? Like you have to be able to totally change your culture because the people whom are required are people who are not considering whether I should go work at Maverick or Oxif or any of this stuff. They are scared of all of it, and it's really Facebook, Google, Twitter, or something of the kinds. All right? And so the only thing that I would highlight here is when it comes to the data modeling, that is going away. Right? And you can get this viewpoint in that with all these different data sources and adding the structure to it and trying to make it work, that you have to spend a lot of time doing the upfront data modeling and SQL queries in a very traditional asset compliant type of manner. That has to go away if you're going to have any scalability. That goes to the business model component there, that if you really do have to expect that humans are going to do all of the structuring of every piece of data, well then you're not only going to have millions of dollars of data, but you're also going to have hundreds of PhDs and data scientists, and the two of those do not work in concert. At least I do not believe you can come up with a profitable business model if you require both of those. Therefore, everything that we've done and why we spent 2 years was thinking about the things that we really had to do with our human expertise. But then as we were tackling that challenge, thinking about how the next time and the next component that is somewhat similar can be more automated in that fashion. In that context, computers do not own houses in the Hamptons or in Saint-Tropez, and so in that manner, you can switch the investing of capital that you were talking about on data sources, but kind of bring it down on the side of human expenses. Second component around here. Once you figure out how to pull it in, you have some viewpoint, and now it's about how do I query it. And I think that you have different approaches to that, right? When you look at math and 0.72, where they're looking probably more on a batch-based level, giving it to humans around there, you can kind of come up with different approaches to how you want to do it. But the core of that is you have to figure out how are you linking all this information together and how are you querying it, either for a human to extract some information and insight out of it, or in our case, for a fully systematic action, both in a batch-based and in a real-time manner. And then I spoke a little bit earlier about this data by temporality problem. They don't care about it on the West Coast. In the East Coast, actually, previously didn't care about it either. It was cold storage and kind of threw it away. But now you have to, on any given data set, yes, you cared about it, but in terms of the relational and bringing it together, there wasn't really a core components around that. So that's really important, and I would say for those who are seeking to endeavor into the data economy, there's a lot of research right now going on around that, and I think that's really going to drive it. It's one of the key differences between advertising technology and the application of ad tech to the capital markets problem to be solved. Then finally, the interconnections and the regime determination. We'll hit that again. That's really the focus of this talk once we get to about 8 minutes. And then lastly, it depends about kind of how are you thinking about this, right? For us, we cannot, one, afford to go build our own physical infrastructure, but then two, it wouldn't make a lot of sense because what we have to do, if you have your own physical infrastructure and you have the boxes, you're going to seek to amortize your costs around that. You're going to always want it to be filled. That's not the way it works anymore, right? We're moving out of that world of quantitative investing the way Matt kind of laid out, where it's kind of, or I think you laid out in terms of similar rotations and turnovers, to really more of a fundamental viewpoint where it's, hey, I have a specific thesis and now I need to take action, I need to do the work. The only difference now is that we're moving into a world where that statement of I have a specific thesis because of something that's going on no longer has to take weeks of investment committee processes, and if you think about it up front, you can actually have that be fully automated without sacrificing the same type of controls and robustness around there, just you have to think about it in advance. Again, why we've been closed for capital since our beginning, and just have been focusing in on the technology. Now, why did we do this? Yeah, I think it comes back to the business model component. A lot of people, I think, see the opportunity to make a lot of money. It has nothing to do with it for me. But it is that bifurcation that we have there, whereby the market has spread itself into these different corners, and you spoke on that a little bit, so I'll go past it. But just think about it in terms of if it were to be binary, you have humans who are taking a well-informed view, and in exchange, they're taking long durations associated with their investment, and therefore having to suffer a lot of volatility of it. Or you have quantitative investment firms that are looking at more traditional data, don't have a really fully informed view, but deal with that via the central limit theorem and moving in and out of the securities. All right? Now, in any of these manners, if you deliver alpha, you can be the monopoly man. but that's not what actually drove any of our kind of personal desires to do it. What actually drove it is this. And I'll back up a little bit in terms of my background, as I mentioned. All right, so as I was an investor, a fundamental investor, and in particular, I was living in Hong Kong, doing diligence on a company out there, but I still had to manage my US portfolio. Plus, I had met my future wife here, and I was thinking about where's the world going, and is it possible for me to maintain this level of energy that I have of working incredibly smart. Right? And people said, Michael, you work really smart and you do it with a smile on your face, but we don't think it's going to be sustainable. And when I met Ashley, I kind of started to agree with them. And so when you look at this chart here, think about this as a fundamental investor, and I think this is Wolf research, right? On the end, what this is talking about is the difference between if you do a bottoms-up viewpoint as to the supply level versus if you look at the actual announcements that are coming out. And you can look at this in terms of the two stars that I have. First one is that if you're just looking at this as a purely traditional data set, you're going to say, well, why is it that in August 15 to September 15, the number starts to go down? And you'll do all this regression, you'll try to figure it out, and maybe you have an insight. However, you can look at this and say, well, actually on August 27th, Venezuela came out with and requested an emergency OPEC meeting because they were really worried about the supply and the way that it was hitting their currency rates. And therefore, it made a lot of sense that heading into that meeting, lots of people would kind of change their viewpoints as to how much they're producing so that they wouldn't actually have to agree to cutting back supply. Right? That contextual understanding gives you a level to express a thesis for your investment. Same way that now, if you look over in December 16, we're moving into a world where I can say, well, what really is the answer to that? Is it really that it's under supply? Well, I can look at all the satellites, and I can do it on the same level of aggregation. I can kind of see how much of this is a true gap versus a not true gap. But what I'd highlight is that even if you have that level of information, what are you going to do with it? Right? You have to turn it into returns. And for any viewpoint that I just mentioned, I can take one thesis and another seasoned fundamental investor can take the exact opposite thesis, and we can both be right because the markets are not a zero-sum game. They are only a zero-sum game if you expect that everybody has the same duration and everybody has the same kind of risk profiles around it. Right? So I can be right in terms of I expected that in September it's going to go down, but then somebody else can be right to expect that by February it's going to go up. Kind of works that way, and it's a viewpoint of your thoughts. And so when you look through this, what really bothered me, though, was that even if I could do that, I had to run around and I had to go speak to people. And, because I was at TPG, I had access to the smartest people in the world. But I started thinking about, well, if I want to create my own stuff and start from ground zero, I'm not going to be able to get myself into these meetings. I'm not going to be able to say that I've had 30 years of doing this, that I'm replicating my intuition. Why is it that I should have to rely on the intuition of a CIO? It would have been helpful if this was on. And finally, how can I work smart and hard? Right? People talk about smart in terms of stop looking at everything and focus in on what really matters. Well, what really matters is only a definition of the normal distribution. At any given time, there is some tail risk that you have to be aware of, and that's going to change on the fly, and in reality, it's going to be too late if you're thinking about it at the time. So that's really where we came to. And so this is really what opened everything up for me, which was that all of these information sources, as a result of this data economy and people seeking to commercialize their data, and this is back in 2009 when people were laughing at me saying that this was going to occur, that really some people here, and most people here probably think of all these data suppliers as a signal. I just think about it as machine-readable information that I no longer have to go have a conversation with somebody and type in, but I can have in real time, and I can teach my algorithms to learn in the same manner that I do. And more importantly, because it's flowing in real time, they can consistently update. And that's one of the big differences in terms of more streaming type of data processes versus where we were before. And that becomes really where we're heading to the next industrial revolution. And it really is that big, and I'm happy to hear it from others, whereby we are going to move into a world whereby data is being commercialized. That's already happened. The algorithms are going to be commercialized, those that work, those that don't. Some of them will end up in an open source, long tail type of Netflix approach. Some of them will be more tailored and specific, kind of a LinkedIn approach. but they'll all somewhat be able to be available. And then the other one is extensible intellectual property. The reason for that is that it takes tremendous fixed upfront costs to be able to deliver these things. People realize that once you've done it correctly, it's fairly extensible to other problems to be solved, and therefore at some point it's incredibly logical from a business perspective to try to amortize those fixed costs across a larger user base, assuming that you don't believe that it's going to be detrimental to your core business. And so with that realization that all this information was coming, I started to think about, well, that's going to create tremendous problems to the way that I was doing my information flow. I'm no longer going to be able to keep up with it. And so if you step back, and I was happy to hear this as well, we all have the same investment process, although we have different derivatives of it. We're all seeking value, we're all setting timing, we're adjusting our risk, and then we're optimizing our portfolio. However, when you look across these different views of this repeatable process, and this actually comes from Protege Partners and Jeff there, which is, I think he's doing a lot to try to be thought leadership there. You look at discretionary, they have their process, and one of the core requirements is that you spent 10,000 hours at being excellent at what you do. Now you look at quantitative investment process, still trying to solve the exact same problem. However, in that context, lots of PhDs with big computational power. And really what I'm grasping for is I don't like quantum mental either. What is the name for this thing? Maybe it's autonomous learning investment strategies, whereby you're combining traditional and alternative data, but essentially the key of it is you are seeking to solve the exact same problems, just in a new approach. And then when you do that, and this is where I'd like to open it up and lead into the panel here, when you do that, then you have the ability to kind of understand what is driving these different factors, quality, mean reversion, momentum. And once you have an understanding of all of that as to what's driving it, you get into where the world is really exciting. All right? You get to understand why is it that a given name should be heading on a momentum trend upwards? Why should it be heading on a momentum trend downwards? Why is there a mean reversion opportunity? And with that contextual understanding, you can really move from kind of going in from one momentum section or strategy into a mean reversion and back over and really trying to capture and really pull out the full alpha of any given name. Now again, a fundamental investor would say, well, I'll hold that, I'll deal with the volatility of that up and down with the expectation that my thesis is correct over some years period and everything will be fine. And really what we're focused in on and where I believe the new world is going into is how can you understand why it's time and when it's time to be able to move across and to capture these opportunities. And when you move into that, and we talked about this regime, why is it that when we talk about regimes, we always talk about risk on, risk off? All right? It's because it's easy to understand. You've got some factors, you've got some standards associated with it. But as I mentioned before, a regime is nothing other than when the Gaussian distribution of the errors are normal. All right? And it can be a continuous time frame, or it can be a bunch of discontinuous time frames. But that's really all it is. All right? And so I believe that with the new data sources that are coming in, machine learning is much better equipped to understanding the regime, and I will tell you why. Alpha is always a beta to something. It's just a question as to has that beta been exposed. All right? And so when we look at this, we kind of say, oh, these are the key drivers of stock movements, and then we get upset as to why are they getting commoditized away. Well, the reality is everybody has exposed these, but then there's still a lot left. So when you think about it in our world, eventually in the future, you're going to be thinking about, all right, clustering algorithm types of strategies, neural nets, really just as a new form of beta, all right, another type of beta once it gets to a level of commoditization. But for us, what that really does is it enables us to fill in the rest of these game pieces there. And once you're able to understand and fill in the rest of these game pieces, essentially what smart beta is doing is it's moving us away where right now we have this kind of integrated process of saying these are the things that really matter, these things do not, and validating what the model's coming up with. Well, the commoditization of core factors is actually the market telling you what they believe is really driving it and what is really important. So that's also going to lead into more continuous automation. And with that, that is going to enable, as I mentioned, a true approach to regime-aware portfolio management. So, hopefully this is getting through it pretty quickly. You guys get an understanding. I'd love to go into more detail on the panel. But again, we have this reputation for speaking more broadly. Why is that? All right? I believe in Adam Smith. I'm an economics major by training. We believe that that what? Plus will change the world. All right? You can actually, if you are truly dedicated, we set ourselves up on a burning platform. We didn't have billions of dollars and PhDs to feed whereby we could kind of play with this. We knew we either had to get this done or we were going out of business. All right? And so as we move forward, it is not our goal to have to consistently recreate the wheel. Many people may believe that these types of conversations are leading to a tragedy of the commons, whereby it's all going to be commoditized away. Well, actually, that's great because that lowers the investment process or investment costs, and then we can move on to other things. In reality, what I'm concerned about is this tragedy of the anti-commons, right? Whereby because we believe that everything we do, just because we had to do it ourselves and is proprietary, is also valuable, we keep it to ourselves. And I'm really happy to see these group of people here, because in reality, they are, right? People sitting here, I saw Leah over here, I saw Tamer, they are the magnates that we think back to in at least the American version of the Industrial Revolution, right? Matthew deciding kind of where is he investing in and the likes in different companies. That's similar to James Pierpont Morgan, right? Deciding kind of how is he going to decide where is the investment, where do we need to have standards. So my core message to everybody here is that if we are to come together and identify which types of activities are actually core to deriving the alpha, you won't hear me speak much about that, all right? The other things, the janitorial work, the processes, when I said with you guys, the focus on permissible data use rights and compliance, those things are not driving alpha. And in particular, when you look at the environment that we are in, where we are moving into such a nationalistic society, and everybody wants to close their borders and think about what's best for them, it is important for us to remember that a boat rises with the tide. And versus other times where the category was very commoditized away, and therefore anybody's individual success was taken away from another's, we are moving into an entirely new world. So the question is, will you be able to compete and prosper, or will you not? It's not a question of taking market share, because the entire thing's going to grow. All right? And so therefore, what I care more about is that Numerai is actually successful, so that I don't have to deal in my diligence talking about, well, he failed, so why won't you fail? All right? And to that context, these are the key things that are required for us to get some level of standards such that we can actually stop focusing in on things that other people have solved and continuously push forward the pace of innovation and collectively capture this data economy. Thank you very much.